With the ease and security of an ETF, we're talking about institutional money pouring into Bitcoin, driving demand like never before. This isn't just growth, it's exponential expansion. Imagine being part of this historic surge. Picture this. The Bitcoin ETF makes investing in Bitcoin as easy as buying stocks. What does this mean? It means opening the floodgates to a pool of investors who've been waiting on the sidelines. So are you ready to ride the Bitcoin wave as it reaches new, dizzying heights? Hit subscribe and stay tuned as we break down how the Bitcoin ETF could be your ticket to the next level of financial freedom. Ever wondered what exactly is a Bitcoin ETF and why it is revolutionizing the investment world? Well, let's unravel this mystery together. Bitcoin, as many of you know, is the pioneer of cryptocurrencies, a digital form of cash that's decentralized and operates on a technology called blockchain. It's a whole new financial universe out there. Now let's talk about ETFs, or exchange-traded funds. In the traditional investment world, these are essentially baskets of securities that are traded just like individual stocks on an exchange. They allow investors to diversify their investments without having to purchase each security individually. Imagine having a piece of a massive financial pie without having to bake the whole thing yourself. Now combine the cutting-edge world of Bitcoin with the convenience and diversification of ETFs, and you get Bitcoin ETFs. Sounds complex? Don't worry. We're about to dive deep into the fascinating world of Bitcoin ETFs. So what is a Bitcoin ETF? Simply put, it's a type of investment fund and exchange-traded product traded on stock exchanges. Now you might be wondering, what does that really mean? Well, it's easier to understand when we break it down. ETF stands for Exchange-Traded Fund, which is an investment fund that can be bought and sold on the stock market, just like individual stocks. But here's the twist. A Bitcoin ETF isn't invested in stocks. Instead, it's invested in Bitcoin. That's right, the world's first and most popular cryptocurrency. So how does a Bitcoin ETF compare to a traditional ETF? In a traditional ETF, the fund owns the underlying assets, such as stocks, bonds, or commodities, and you, as an investor, own a portion of that fund. With a Bitcoin ETF, the underlying asset is Bitcoin. The fund owns the Bitcoin and you own a portion of that fund. But why would you want to invest in a Bitcoin ETF instead of just buying Bitcoin outright? Well, that's where the benefits of a Bitcoin ETF come into play. Firstly, there's ease of access. Not everyone has the time or knowledge to manage a cryptocurrency wallet, deal with private keys, or navigate cryptocurrency exchanges. With a Bitcoin ETF, you can invest in Bitcoin just like you would any other stock, through your regular brokerage account. Secondly, there's diversification. By investing in a Bitcoin ETF, you're not just investing in one single Bitcoin, you're investing in a pool of Bitcoins which can help to spread risk. Lastly, there's liquidity. Bitcoin ETFs are traded on stock exchanges so they can be bought and sold during market hours. This means you can get in and out of your investment quickly if you need to. So, Bitcoin ETFs are a game changer, but how do they work? Let's find out. Now that we know what a Bitcoin ETF is, let's delve into how it operates. The mechanics of a Bitcoin ETF are quite fascinating and a bit complex, but don't worry, we'll break it down to make it as clear as day. The fund's operation hinges on a process called creation and redemption, which involves the exchange of Bitcoin and ETF shares between the ETF and what we call authorized participants. So, who exactly are these authorized participants? Well, they're usually large financial institutions with a lot of buying power. They play a key role in the operation of the ETF and are the only entities that can create or redeem ETF shares. Let's talk about the creation process first. When the ETF needs more shares, an authorized participant assembles a portfolio of Bitcoins equal to the value of the ETF shares it wants. It then transfers those Bitcoins to the ETF in exchange for ETF shares. This process expands the number of ETF shares on the market, but it doesn't change the total amount of Bitcoin held by the ETF. Now let's move on to redemption. This is essentially the reverse of creation. When there are too many ETF shares on the market, an authorized participant can buy a large block of ETF shares and exchange them with the ETF for an equivalent value of Bitcoins. This reduces the number of ETF shares on the market, but again, it doesn't change the total amount of Bitcoin held by the ETF. The beauty of this creation and redemption process is that it helps keep the ETF's price in line with the price of Bitcoin. If the price of the ETF shares deviates too much from the price of Bitcoin, Authorized participants can step in and use the creation or redemption process to bring the prices back in line. And there you have it. It's a basic rundown of the mechanics of a Bitcoin ETF. It's a bit like a dance, with the ETF and the authorized participants stepping in and out in response to market conditions. The creation and redemption process helps keep the price of ETF in line with the price of Bitcoin. Pretty neat, right? So, you're probably wondering, how can you invest in a Bitcoin ETF? Well, it's quite straightforward. Investing in Bitcoin ETFs is much like investing in any other ETF, or for that matter, any publicly traded asset. You can buy and sell shares of a Bitcoin ETF on traditional exchanges. First, you'll need a brokerage account. If you've already got one, great. If not, setting one up is relatively simple. It's a matter of choosing a broker, filling out an application, and funding your account. Once you have your brokerage account set up, you can place an order to buy shares of a Bitcoin ETF. Just as you would with stocks, you can choose between market orders, limit orders, and stop orders. Now, what makes investing in Bitcoin ETFs attractive is the ease and simplicity. You don't have to worry about setting up a digital wallet or dealing with the complexities of cryptocurrency exchanges. You're essentially buying a share in a fund that does all the heavy lifting for you. However, as with any investment, there are potential risks and rewards. The value of a Bitcoin ETF is tied to the price of Bitcoin. If Bitcoin's price goes up, the ETF's value goes up. If it goes down, so does the ETF's value. It's essential to understand that while the potential returns can be significant, the risks can be equally high. Investing in Bitcoin ETFs provides a simple way to gain exposure to Bitcoin, but always remember, with great potential returns comes great risk. So we've covered a lot today about Bitcoin ETFs. We've unraveled the mystery and understood the mechanics of these financial instruments. We've seen how they offer a unique opportunity to delve into the cryptocurrency sphere without the complexities of direct Bitcoin ownership. Remember, Bitcoin ETFs are not just a trend, they're a game changer, poised to revolutionize the investment landscape. In summary, Bitcoin ETFs offer a new, exciting, and simplified way to invest in Bitcoin, opening up the world of cryptocurrency to a whole new audience of investors.